It's always a great time to start off the talk with some in-depth economics. It's just start off the whole weekend with it. I will preface this by saying that large sections of this talk come directly from this book by Guglielmo Cacchetti and Michael Roberts, which is Capital in the 21st Century Through the Prism of Value. I'm going to break it up into two parts. Largely, we're going to talk about the contemporaneous issues that have been popping up in the last month or so. But then also, we're going to do a deep dive into our fundamentals, right? We really kind of need to make sure we focus on that. So firstly, a global overview. The already meagre projections of recovery announced by the major capitalist institutions last year and in January this year fell even further after the rollouts of Donald Trump's tariffs regime. And throughout the period of recovery from COVID lockdowns, we've seen a massive transfer of wealth from the poor to the rich, and we can only see this continue into the near future. The much touted tariffs policies by Trump, justifications are a clear joke. These processes are not some genius plan or geopolitical strategy by any stretch of the imagination. They are a means to enrich Trump and his associates. Even if the vast majority lose from these tariffs, but a tiny section of capitalists come further into Trump's orbit, then it's a success for him. And that's what's happening, right? Combining this with his latest forays into the crypto market, and it's clear for Trump he's just fleecing all he can, without regard to wider economic problems. In the last week, we've been talking a lot about the big, beautiful bill in the United States, itself entailing massive tax cuts to the wealthy, tax increases for the poor, and brutal cuts to Medicaid, Medicare, among so many others. It's come to a point that many economists recently have been stating that power politics is now more important than economic advantage. In particular, what they mean by this is a hegemonic power like the US will try to improve its economic advantage, not by better productivity growth or investment at home, but by intimidation and force over other countries. We've seen how this has played out in Ukraine and the mineral deal, even lighter versions more recently with Qatar and its gifting of a palatial 747. And indeed, all across the Western world, governments have been signing off on access to natural resources to American companies and also increasing their investment in defense spending at the demand of the US president. And of course, this rise in protectionism and the change in global structure of economics is simply the veneer of international trade and cooperation falling away. International cooperation among equals to increase trade and markets was always an illusion. It has always been a system of securing profit-making by easier access to raw materials, lower costs, labor, or new markets. There's never been trade among equals. There has never been a fair competition among capitals of a broadly equal size within economies or between national economies in the international arena. The large and strong have always eaten the weak and small, especially in economic crisis. And the imperialist core in the Western countries has extracted value and resources in the trillions out of the peripheral economies over the last 2 centuries. The results of these tariffs and a new global policy of protectionism will be a slump, and likely going back to more inflation. As I talked about last conference, inflation is an effective measure to offset the inability to sell profitably onto the consumer, and that's another marker of that collapse in the rate of profit. There is a separation of a type in the ruling class of their support of these protectionist policies. Tech oligarchs largely don't care about tariffs. Their profitable products are not commodities manufactured, but data and internet or speculation on new technologies. And you can see this difference in like the silence from Facebook and Google, on one hand, whose profits largely come from intangible products, as opposed to Apple's response to these protectionist measures, since its profit relies heavily on devices produced in China. But overall, the tech oligarchs recognize the quid pro quo style of governance and see the advantages in the deregulation of AI and other laws that got in the way of speculative profit. So quite happy to cozy up to that far-right movement. The homegrown manufacturing capitalists in the US, they do still exist. They have different interests, though, slightly different. They're no longer able to compete in many world markets. And supporting them is the stated aim of the Trump administration. It's why they're bringing in these tariffs. But as Engels argued back in the 19th century, free trade is supported by the hegemonic economic power as long as it dominates international markets with its products. When it loses dominance, it will adopt protectionist policies. And this is what happened in the late 19th century to the UK. Now it is the turn of the US. David Ricardo and the other economists of his day are wrong in claiming that all countries gain from international trade if they specialize in exporting products where they have comparative advantage. That's what we do, right? We have comparative advantage in milk and logs. Yeah. Free trade and specialization based on comparative advantage does not produce a tendency towards mutual benefit. It produces further disequilibrium and conflict. And this is because capitalist production creates a tendency towards increasing centralization and concentration. And it leads to uneven development. It leads to conflict. On the other hand, as well, the protectionists are wrong to claim that import tariffs and other measures would restore a country's previous market share. They're not going to fix the US by doing this, right? Productivity growth and lower costs in production depend on increased investment in those sectors. But there's a lack of willingness, right, to invest more. The profitability is low. They're not making more money out of this. Why would they invest continually into it? And that's been the experience of the last 2 decades in particular. It seems that that section of capitalists want to return to wartime policies and Cold War strategies to build domestic industry, science, and military forces, but they don't actually want to pay for the investment. The state doesn't want to pay for the investment either, right? And so all of these policies, again, will not recover any sense of the economy over there. It's also important to recognize that these industrial strategies that they're talking about here, this mass investment into manufacturing and production, are not isolated to the far right. These are also standing policies of left-wing senators such as Elizabeth Warren and Bernie Sanders. They're a staple of reformist politics of saying we just need to increase manufacturing and production, increase productivity. The post-World War II international trade institutions such as the World Bank, IMF, as well as peripheral countries such as our own, are alarmed at the declining world trade rules, right? It signals a deep change in geopolitics, shifting from the language of free trade and neoliberal free rules for markets to much more of a quid pro quo mafia style, I'll take what I want. The ruling class internationally is dividing itself along these lines, right? Pulling the strings of nationalism to push for more profit. But I will say that that division is not as deep as it may appear. And I'll talk about that shortly. So yes, there is a change in view among part of the elite on economic policy, particularly since the global financial crash of 2008 and the long depression in economic growth. To give a rough context, in the immediate post-World War II period, international trade and financial agencies were formed under the control primarily of the US, that's the IMF and World Bank. The profitability of capital of the major economies was high, and it allowed international trade to expand along with the revival of the European and Japanese industrial power. This was the period where Keynesian economics dominated, i.e., the state acted to manage the economic cycle and support industry with incentives and even some industrial strategy. That golden era of time came to an end in the 1970s when profitability fell. The major economies suffered their first simultaneous slump in 74 to 75. Keynesian economics was exposed as a failure, and economics returned to the neoclassical idea of free markets, free flow of trade and capital, deregulation of state interference, and ownership of industry and finance, and the crushing of unions. Profitability was modestly restored, but globalization became the mantra. In effect, the expansion of imperialist exploitation of the periphery under the guise of international trade and capital flows. And that really dictates that period of the 80s, 90s, and early 2000s. We're saying here that effectively this signals a bit of a different stage of what they're trying to say, what economists are trying to say. Protectionism internationally is being combined with government intervention domestically in decimating government services, ending climate change mitigation spending, deregulating finance and the environment, and boosting the military and homeland security forces, particularly increasing deportations and intimidation, not just in the United States, but across the Western world. In reality, this is what's happening globally, right? Governments are moving towards these things, and this is the real outlook for the coming year. But to understand these tendencies and what gives rise to them, we have to go back to our fundamentals. And so I'm going to shift to the second part of the talk now. And let's start with the law of values. So, what is value? Marx starts from the view that value is the result of the exertion of human labor. Without any exertion by humans, nothing is produced that keeps human beings alive and well. And so that means that value is not some metaphysical abstraction, but it is actually physical. It exists in objective reality. The exertion of human labor, both objective and mental, right? Like the fact that you actually have to do it and thinking about it, is material and can be measured in terms of time. How many hours, how many minutes did you spend laboring on it? Nature also has value to us in that without air, the planet, trees, forests, water, etc., there'd be no human life. So it has a use value to us. But it requires the exertion of human labor to turn this use value of nature into other uses for humanity. From forests to timber to houses requires the exertion of human energy and thus labor. But it's only under capitalism that those use values required and generated by human labor turn into commodities for sale on the market for profit. The results of human labor are converted into commodities, which then have value with dual aspects. Yes, there is the use value we just talked about, but then there is the exchange value. These two aspects of value within the commodity reveal a basic contradiction of capitalist production, i.e., between production for social need, the use value, and for profit and accumulation of capital, the exchange value. And that is why Marx starts with the commodity and Das Kapital. Under capitalism, the only objective way of valuing a product of human labor, a commodity in itself, is measuring the labor time involved. Not by each consumer's subjective opinion of its value or exchange value or price, right? Those two aspects, the use value and the exchange value, are products of both a specific type of labor, which produces its use value, and of an abstract labor, which produces its exchange value. The abstract labor is the expenditure of human energy irrespective of the type of activity. It's the transformation of that abstract human labor into the value of commodities, which is the focus of the law of value. Marx holds that there is a law-like relationship between the labor expended under production and value. The quantity of labor measured in time determines both the quantity of value produced, then since value is labor, and the quantity realized is then realized through redistribution, through sale on the market. All right. Value does not emerge from this labor immediately. It doesn't just pop into existence. This is a process by which capitalism creates a commodity. The generation of value goes through different stages. The capitalist production process has been started and not yet finished. The laborers are performing abstract labor, right? They haven't created or realized the commodity's value yet. At this stage, the value is potential. Hasn't been sold, so you can't realize that value. When the production process is completed and the commodity is finished but not yet sold, the abstract labor that has gone into it becomes the value produced or contained, embodied in the commodity. This is their attempt to sell it on the market. And the material substance of that part is abstract labor. Since a commodity must be sold in order to realize its value, the value contained in the commodity is also its potentially realized value. When the commodity is sold, the value contained in it becomes realized value. That realized value is represented by money, the universally accepted form of value. In a capitalist economy, due to competition among the many producers of the same commodity, a commodity may not realize the value contained in it. And so not all the labor which has been needed for its production might be realized as value. Competition on the market decides the socially necessary labor time required to produce and realize the value of the economy. You can kind of see it. If it takes me 24 hours to build a cabinet, and yet it takes a factory an hour to build a cabinet of the exact same quality, I can't charge you 24 hours of pay for that, right? In comparison and competition in the market, you're going to buy the factory-made machine that's exactly the same, but 24 times less the price. And so the value contained in a commodity is thus modified into a price of production. Now, the major factor influencing that profitability, how much money you can actually get out of it, is, as I said before with the factory example, is technology, right? New technologies replace workers with means of production, machines, factories. They produce less value, surplus value, but they realize more value at the cost of other firms that haven't developed their technology. This will force them to shift to more efficient technologies, and this continual modification of the process of production, driven by the changes in technology and competition, that tells you that Marx's law of value is not a static equilibrium. It is in continual motion. And when one production process terminates, another one begins, and the outputs of the first become the inputs of the second. Marx's great discovery of the law of value is surplus value. In production, there are owners of the means of production, and there are the rest of us, who own only their labor power. The owners of the means of production employ human labor power to produce value contained in commodities, which are owned and sold by the owners of the means of production. The owners do not pay the full value contained in the commodities to those selling their labor power to produce them. The owners will pay for the use of the machines and the raw materials and the wages of the workers employed, but they receive in value contained in the commodities and realized on the market much more than they paid in, right? But where does that value come from? You cannot underpay a machine. You cannot underpay for raw materials. You don't have control over those costs. The only part of that whole mechanism that an individual capitalist has control of is the wages of the worker, right? And it is that difference between the sale price and the variable capital, the wages of the worker that you can pay, that is the surplus value. That's the Marxist term of exploitation, right? That is our definition of it. As mentioned above, individual capitalists are continually striving to increase the size of that gap, right? The size of that surplus value in competition with others. They can do so by increasing the workforce or increasing the intensity and hours of work by labor. But there are physical and social limits in doing this. Other capitalists may introduce new technologies that speed up the productivity of their workforce and so reduce the hours of work necessary to make a commodity below the average. And such capitalists can then undercut those with less advanced technology. And this forces all capitalists to invest more and more in technology and machinery to revolutionize production. This is the source of why capitalism is so dynamic in revolutionizing production. But it is also the source of why the investment in that machinery and raw materials will tend to rise relative to how many workers are actually employed. right? We'd call this ratio the organic composition of capital. The law of value, and why I spent so much detail on it, and I know it was a lot, okay, says that only human labor can create value. Machines can produce more units of commodities per worker, but without the exertion of human labor, machines cannot make commodities. As the rise in the organic composition of capital can only come about by capitalists investing in more surplus value in machines relative to investing in human labor power, there is a tendency in capitalist production for the subsequent increase in new value to be less than the increase in investment employed. I know, lots of complicated statements here, but in business terms, it's very simply stated. It's called the declining return on investment. Okay? It's a very common part of business courses. In Marxist terms, the rate of profit in a capitalist economy tends to fall over time. Thus, the law of value leads to surplus value and the organic composition of capital, and then the rate of profit on capital. And from these abstractions, we can continue to apply these scientific postulates to the modern day to help us see through reformist promises of a Green New Deal, a nicer face to capitalism, and focus on the real target, the abolishment of this system. The case I want to make to you is, despite what is written by popular left academics, capitalism is not dead. It has not fundamentally changed from its abuses and horrors of the last 200 years. It is still a system of crisis and will continue to be. It has not become some sort of neo or techno-feudalism. Its core aim is still the same, and that is restoring the rate of profit at all cost. So to go into even more detail about this, Marx's theory of crises under capitalism is composed of various elements and levels of causation that must come together to explain slumps in production, investment, and employment. Right? Before capitalism, crises were products of scarcity, famine, and natural disasters. Now they are products of a profit-making money economy. Above all, they are man-made, and they appear to be outside the control of man. Now, there is no systematic presentation of a theory of crisis in Marx's writings. His work was very, very unfinished, right? It's supposed to be 6 volumes to Capital. But you can find elements of this theory in various works, volume 1 to 3 of Capital as well, but also in the Theories of Surplus Value, which was published by Karl Kautsky after Marx's death. But trying to be as quick as possible, to remain competitive, capitalists must invest an ever-increasing amount of capital and machinery. Therefore, the proportion of capital spent on machinery increases in relation to the capital spent on living labour. Yet, as Marx argued, the exploitation of living labour is the only source of profit. Machines do not generate new value. If capitalists spend more on machines and less on the only source of surplus value and therefore profits, then their profit rate will fall. And if profit rates fall, capitalists aren't so keen to invest, which brings on the slump. The unplanned and competitive nature of the system means that behaviour which is good in the short term for the individual capitalists, in the long run, has a detrimental effect on the rate of profit of the capitalist class as a whole. And that is the tendency of the rate of profit to fall. This absurd contradiction that as technology becomes more productive and more sophisticated, the profit rate of capital investment goes down, right? When the profit rate falls to the point where the whole mass of profit falls, like how much money they actually had, falls, that is the tipping point for crisis. This leads to an investment strike by capital, and when profits fall, less is available for that further investment. That's precipitating the crisis there. They are compelled to continuously reinvest their capital at the most profitable rate. Capitalists are drawn to certain policies and ventures to chase that return. We might call these counter tendencies, right? The tendency of the rate of profit to fall is not, it's called the law, but as it slips down, it has also the possibility to recover and go back. And these are from these counter tendencies. They temporarily dampen or reverse that fall in the rate of profit. When they have exhausted their action, though, the tendency emerges again. The profit rate continues to collapse. The typical ones we would see are increasing the intensity of the exploitation of labour, right? That increases the rate of surplus value, and generally you'd talk about union busting, legislative changes, right? Like, I don't know, it hasn't actually happened, but not increasing the minimum wage and those kinds of things. Higher unemployment, longer hours of work for the same pay. You could also have the relative cheapening of elements of constant capital, right? Like lowering the organic composition of capital, either like making new technologies easier to adopt, making the machines cheaper, decreasing the costs of manufacture, increase to raw materials, right? Or degrading the environment, right? To get access to those materials and make it easier to make these new machines. You could lower the wage rate below the normal value of labour power. You could underpay your staff, basically, right? And that would raise the rate of surplus value again. And say the same processes of union busting, real wages not meeting inflation, higher unemployment, longer hours, same pay. Also, cutting public services cuts into that too. Profits from foreign trade into a national economy, right? The international trade, securing new markets, accessing lower labour costs, tax avoidance, access to raw materials, in short, imperialism. You could also invest in stock and bond markets for financial gains, what's called by Marx fictitious capital. That's the finance, investment, and real estate idea, something that's very popular here. Or cryptocurrencies, derivatives of bond trades. These counter tendencies are the things that introduce the cyclical trends and the long-term downward rate of profit. This is the source of that business cycle. A crisis of slump in production is necessary to correct and reverse that fall in the rate of profit. But the flavour of the crisis, the surface cause, if you will, is cultured by the counter tendencies that were implemented to fix the previous crisis. A successful recovery of the profit rate also only serves to make the next crisis deeper. Marx's law of the tendency of the rate of profit to fall suggests an inexorable decline over decades and longer in the profitability of capital accumulation. It suggests a future where all of the counter tendencies to recover the profit rate have been exhausted. And as such, there would be an end to an increase in profit. To quote Marx directly, "It is enough to mention the commercial crises that by their periodical return put the existence of the entire bourgeois society on its trial, each time more threateningly. In these crises, a great part not only of existing products but of the previously created productive forces are periodically destroyed. And how does the bourgeoisie get over these crises? On the one hand, by the enforced destruction of a mass of productive forces, and on the other, by the conquest of new markets, and by more thorough exploitation of the old ones. That is to say, by paving the way for more extensive and more destructive crises, and by diminishing the means whereby crises are prevented. Once the cycle begins, it is regularly repeated. Effects in their turn become causes, and the varying accidents of the whole process, which always reproduces its own conditions, take on that form of periodicity." The theory of crisis is a cornerstone of Marxist politics, firstly because it declares that capitalism is an irrational system, and that it can only be a transitory stage and cannot continue indefinitely. Secondly, though, as well, because the theory itself dictates the strategies and tactics that a revolutionary organisation ought to take. There are alternative Marxian theories of crisis that ignore or reject Marx's law of profitability. I'll just cover a couple of these here, but these form the basis of reformist projects that we already interact with. They come from a radical left perspective. However, they lead to reformist strategies. The first group says that crises are caused by instability in the system and reckless anarchy in the banking and financial sector. Crises originate in that financial speculative sphere due to extremely high levels of debt, rampant speculation and permissive monetary policy, the loosening of rules governing borrowing or lending due to deregulation. All of these arguments were particularly big after 2008, but before as well. The origins of these crises, however, are in the productive sphere, in the creation of commodities. If profitability falls in the productive sectors, less surplus value can be appropriated by the financial sectors. These sectors, by lending less, see their profits fall. The crisis is born in the productive spheres and extends itself into the unproductive ones. When that speculative bubble that's been blowing up explodes finally, the financial firms go bust and the crisis moves back from the financial and speculative ones back to the productive ones. Thus, the financial crisis is a catalyst of the crisis of profitability, but the origin is not in finance and speculation. It's because of that lowering profit rate in the first place. The danger of arguing that it is unbounded finance capital that is at the core of crises is that, in short, crises are the result of policy mistakes. And the corollary of this theory is that by simply fixing the policy mistakes, we fix capitalism. The second type I want to cover here today is that crises are caused by the underconsumption of the working class, inherent in capitalism, so that slumps occur when the demand for consumption goods falls. If commodities are unsold, capital suffers a loss and the rate of profit falls. The theory posits then that lower wages reduce workers' consumption and thus lower the rate of profit and act as the cause of the crisis. This theory can be expanded more simply as inequality causes crisis, right? The rising inequality of wealth in the major capitalist countries since the early 1980s has been presented as the main cause of crises, and in particular, the Great Recession of 2008. And this remains the dominant view of most leftist and many Marxist economists. The argument goes down that the financial crisis was caused by debt, mostly in the private sector. As wages were held down, workers were forced to borrow more to get mortgages to buy homes or loans to buy cars and maintain their standard of living. These becoming more affordable, the sheer weight of debt could not continue to be supported, and the house of cards came crashing down. But empirical evidence from multiple economic analyses shows that the highest wage rises occurred just before a crisis, that there is no evidential link between inequality and particular crises. This might be the flavor of the day for this particular crisis, but it's also not the case of the 73-74 crisis or the 81-82 one either. But also the same corollary of this theory applies. If it's a problem of low wages or poor distribution of wealth, then those could be fixed through policy decisions, right? And again, we're back at reformism. In order to win a world in which we can truly realize our most authentic human capacities, we need to act in ways that are hard-headed, strategic, and disciplined. Capitalism cannot be reformed, tweaked, or reoriented. Rather, it must be replaced, and that quite simply will be no easy task. The existing capitalist ruling classes will do everything in their power to prevent the destruction of the system to which they are wed, and we must be no less determined in our efforts to prevent them from having their way. We have to look beneath the appearance of events, beneath the proximate causes to the essential or ultimate cause. Critics hold that the tendency of the profit rate theory is monocausal and thus obviously wrong because all crises are different and therefore cannot have the same cause. They do not see that the same cause can and does manifest itself in different forms depending on the continuously changing effects of falling profitability on these socioeconomic relations, the counter tendencies themselves. Das Kapital starts with the abstract and proceeds step by step to the concrete. This is vital to understand because it is the biggest sin committed by mainstream bourgeois economics, is to look only at the appearance of things and not see the essence. They look only at the surface and do not dig deeper. I'll leave you with this. Marx's tendency of the rate of profit to fall remains integral to any Marxist theory of crisis under capitalism. The law of the tendency and the counter-tendencies offers a causal explanation of the cyclical nature of capitalist accumulation, and an increasing body of empirical evidence to back it up. It allows us to make sure that we are not oriented to reformism or have any illusions in it whatsoever. It allows us to actually hold a revolutionary angle. Thanks very much.